All right, now this is a week we have been waiting for, right? We're excited for this. We're talking about the most anticipated earnings for the week of October 19th. This is where the big boys start hitting, okay? Last week was financials. And this week we're getting some of the big boys that we'll go into, and I'm pretty excited over some of these. So let's go right into it. Starting with Monday before open. I'll give you insights, obviously, as we go along. There's 3 focus stocks I have for this week. They're all relatively different in terms of what they do. So we'll get to those when we get to them. Starting Monday with Halliburton, Lennox International. We have Phillips. Obviously, most known, I think. There's a couple things Philips is really known for. You talk about your appliances. You talk about, obviously, electric toothbrushes. Philips does a lot of things, and I don't know necessarily what this environment looks like for them. When you talk about retail getting a lot of the spending going on right now, I don't know if it's necessarily going to get put into these type of products. But I think it could. Again, stimulus spending, which we haven't necessarily hit in a bit. I think it benefits a company like Philips for sure. But again, we haven't really had that stimulus check, and the second one hasn't come out, so I don't know what this quarter looks like for them. But I could see a little bit of benefit from residual stimulus spending. I think that's possible. Other than that, we've got Old National Bank. Still some financials in here. Still some financials. So just be expecting that. We have Simmons First National Corporation. I don't know what this logo is, but it's just like a G or something. It's just a G. I'm sorry. We've got HDFC Bank as well. More financials. No insight on those. The couple banks listed there, really. After close, we do have one of my focus stocks. That's right. It was weird choosing them because there's a lot of companies I'm really interested in this week. Logitech's going to be my first focus. And really the reason for it is the reinvention of the work from home model. We've seen a lot, and I mean a lot of companies now that have offered now. It first was a temporary thing where they offered work from home or remote labor. Now, a lot of these companies have come back saying this is a permanent option for some people. This can be a completely permanent option if the person so chooses. And again, what do you need when you get to an environment like that? Logitech, who makes really computer supplies, you're talking about accessories from mice to keyboards to cameras to microphones. I mean, Logitech they make your computer accessories. That's just what they do. And I especially want to talk about potentially the webcam potential that they offer. I think this could be a big category for them, just really due to the increased use of products or services like Zoom video conferencing, Skype, stuff like that. A lot of video conferencing really will see a benefit because some people at home might not have had a webcam on their PC, and now they might have purchased one so that way they can actually conduct their business from home more professionally. So I'm curious to see what that looks like, and I think that could be a benefit for them, actually. So keep an eye on Logitech. They're expecting, and by they I mean analysts, EPS is 57 cents versus 50 cents of a year ago. I think they have a chance to beat that, but I can't give you an EPS line because I think they could also miss at the same time when you talk about the difficulty in distribution and everything that comes into increased cost there. I could see them missing it. Now, revenue is estimated to be $834 million. Overall, expected for the full year to grow 12.6%. It's pretty high growth expected for a company like this. I can't lie to you, but I think it's a goal they can actually hit because I do think there's a lot of tailwinds here that are kind of helping push this company forward and really benefiting because the work from home craze is not going anywhere, and I think people will start investing in their home offices, and a company like Logitech benefits from that. So That's my say on Logitech. After them, we have IBM, another really interesting one. IBM, again, your real focus right now is going to be on cloud. Um, Cloud is going to be the focus. Cloud and data centers are massive for IBM. So it's a company really transitioning where they used to do a lot in terms of providing companies with different handheld devices such as, like telephones. I mean, IBM, it's in everything. But the story right now is IBM Watson, and that's really going to be what investors are focusing on with this company, and to see what that growth level looks like. So keep an eye out for IBM. You've got Cadence, Agree Realty Corporation, PPG, Crown, Steel Dynamics, Equity Lifestyle Properties, Zions, Bancorp, and Hexcel. Nothing crazy that I have to say about these companies. I don't really have mega insights on these ones, but we are going to go into Tuesday before open, in which you see Procter & Gamble report, and I do have some good things to say about Procter & Gamble, P&G here. I think there's a big benefit that I could see from them. We talk about retail spending. I think Procter & Gamble has benefited quite a bit. I can tell you from my experience with retail, which is current, categories like this are up quite a bit. Your Procter & Gamble products are up quite a bit. Obviously, from paper to chemicals, Procter & Gamble makes a lot of stuff. In case you were curious, they make a lot of consumer products, but they are really benefiting quite a bit from everything going on right now. So I could see a good revenue beat from them. Even though it's a boring stock, it is. It's in that category with your Campbell soups. They're just boring stocks, but I think Procter & Gamble could have a really good year, and they should have a really good year. So I'll still be looking at these earnings. We have Lockheed Martin. Not sure what to think about them. Really interesting. It's just an interesting year to even think about that. There's Philip Morris. Tobacco, don't know necessarily again. I don't know. Smoking is on the decline. I can't lie. It is. So I don't like companies like this well, first off, because they're selling, cigarettes. Very much not good for you, but there's a lot of things that aren't good for you, to be fair, that we're selling actively. But Philip Morris, a company on the decline, really, in my opinion, because the trend is kind of over and it's shifted a little bit. So I don't know. They'll have to stay relevant somehow, but I don't like the investment with Philip Morris. So not sure what these earnings look like, but I think it's a gradual decline still. Prologis, Ligand, Albertsons Company, Synchrony Financials. You get back and you look at the numbers of like a Discover from last week. Some of these good companies last week that reported in terms of financials, then you can see a potential benefit here from Synchrony. I'm curious because obviously I don't think it's something that benefits one credit company. It'll likely benefit all of them, most likely, in terms of the increased spending we've seen. There's Graphic Packaging, Travelers Insurance, and Manpower Group. I've got enough manpower really for the entire planet if you were curious about that. A lot of manpower here. It's a huge deal of manpower. After close, obviously a massive one. Believe it or not one of my focus stocks, but it is Netflix. Now, Netflix, again, here's the deal. Here's the deal with Netflix, and this is what investors care about. They care about subscriber numbers. They really do. And if they post, and they really shouldn't post any sort of quarter with a decline. Now, there has been some mega controversy in this quarter. You talk about their, controversial film, Cuties, that they were advertising quite a bit. That got a lot of people pretty upset about it with sexualizing of children. And I don't know if that leads to any downloads and deletions of subscriptions. I don't think it's a massive part of their audience that really did, but I think it did cause some outrage. So there's potential loss of subscribers in that aspect. But this is the perfect quarter really baked in for them because of the fact of so many people staying at home unemployed, and they got nothing to do but watch TV, right? And Netflix is really their choice as cable dies off. So look for subscriber numbers on Netflix. That'll be your focus point. We have Snap. Snapchat is obviously an app I use. Being a relatively young aged individual, obviously we use Snapchat, no doubt about it. But The key here is going to be with ad rates. We've seen some reports of ad rates accelerating and really a lot of ad spend coming back. So I think Snap benefits on that aspect, but I don't think this quarter is going to be beautiful for them. So I'm very curious on what the stock does. I can't give you an insight because I don't know for sure, but I think there should be good numbers regardless. We've got Texas Instruments, TI. Not too sure on Texas Instruments either. Very consistent basis to your portfolio, though, I can tell you that. Doesn't move much, pays a dividend. Boom, beautiful. Now I do have one of my focus stocks here, an iRobot. And why iRobot? Obviously, it's a position I hold, so it's one of my focus stocks. And that's not just me being selfish. Now, what you need to notice here is an EPS estimate of 97 cents versus $1.24 of a year ago. Now, this is a super tough one in terms of that EPS line for me, because I frankly think there's a good chance that they miss on this, but I honestly would not be mega surprised if they beat as well and beat by a decent chunk. I could see them posting actually over that 124 line even potentially if this was a really good quarter for them. And again, I think it depends on a few things. Obviously, they got some relief from tariffs, but I don't know how that necessarily will 100% impact this. It'll impact the bottom line, no doubt, but it will impact the entire quarter, parts of the quarter. I don't know what that looks like, and I'm curious to find out. And from a revenue perspective, expect a $312 million, which is an 8% growth, which is big for them. 8% is pretty good, but expect for the full year, really only 1.3%. I think this quarterly revenue will actually be a beat, believe it or not, and I think for the full year, they'll actually post a beat as well. I think they'll post over that 1.3% increase. In my opinion, I think this company's doing a lot of things right, and I think they're really on the forefront of future technology and what the future holds for us in terms of their products. So keep an eye out for them and any potential announcements as well. But obviously, we care about the numbers on the Brava mop and obviously the Roomba itself. But the Brava is kind of what I'm looking at right now. After iRobot, we've got Teradyne, Calix, WD-40, Navient, Interactive Brokers. You see a brokerage company here. Interesting stuff. Charles Schwab put up good numbers. Well, Interactive Brokers are the same. We shall see. You got CN, and before open, we got a very nice company in Abbott Laboratories, doing a lot of good things for us. I expect some decent numbers on Abbott. Regardless, it's a good holding. I can't lie to you there. We've got telecom here with Verizon. Really curious on this. Obviously, we have 5G up and coming, so I think that'll be a big announcement for them, and guidance could be pretty big for them. We'll take a look, though. There's Ericsson, Winnebago, that actually posted a massive quarter last quarter because of the increase in people doing their own traveling without using planes. They're getting the family vacation together using Winnebago. Does it carry over? I think it does a little bit into this quarter, but I don't think it's a massive breakout quarter for them. But I still think some good numbers are going to happen. You then got Thermo Fisher Scientific, NASDAQ, Biogen, NextEra Energy Partners, and Flagstar Bank. Nothing too crazy with those following up there. After close, though, here we go. It had to be a focus stock. You know it had to be with Tesla. Just a beast overall. Expected EPS of 56 cents versus 37 cents a year ago. I could see that certainly being the case. Again, they are going to grow year over year regardless in terms of EPS, so you need to note that. But they are expecting a 31% increase in terms of revenue. And if I'm being frankly honest, based off of their vehicle delivery numbers, I actually don't see that as very feasible. So you see the most recent month that they released, they actually showed only a 1% growth in vehicle deliveries year over year. A 1% growth, and the thing about it is average selling price is actually starting to decline a little bit. You're not seeing a rising average selling price. So I think overall they don't hit on a revenue perspective, which would be crazy for a company like this. And I could be wrong, but I don't think they're hitting it just based off of their delivery numbers they've been posting. They could post some really good numbers here somehow, but just based off the transparency they've been giving with delivery numbers, I don't think it's feasible for them to hit a 31% increase. Now, could be wrong, but who knows? 22% expected for the full year. We'll see about that. So keep an eye out for that. And any new announcements, obviously. Then we have Chipotle. Pretty interesting, obviously. Stock there. I love Chipotle. We love Chipotle. Then Lamb Research. Xilinx. We have Whirlpool. Again, we talk about, obviously, accessories for the house in terms of appliances. That's Whirlpool for you. Maybe get a little bit of benefit there from a last minute spending of some stimulus check action. We have a Line, CSX, Equifax, Netgear, and Discover. Another financial. You're going to want to look at Synchrony's earnings to kind of get a good view of Discover. I think Discover's a better company, all things considered. So I expect good numbers for them, and I do think credit spend has been up pretty big. Even in recession environments, people are spending a lot on credit because, well, it's kind of what they do. When they don't have the money to afford it, they use credit. So I'm not saying it's the right way to do it. Thursday, before open, we got some big ones still too. I mean, it's crazy the amount of big companies. Before open, we've got Coca-Cola. I love looking at Coca-Cola earnings for a lot of reasons. Organic growth is a big portion for them. You got to look at organic growth when you're talking about Coca-Cola. But I think obviously revenue is going to be down year over year, and a lot of that was from the shutting down of the restaurant portion, and they haven't been gaining that money from that. This quarter, a lot of them have opened up, so you're going to see a bit of a resurgence, but I do think year over year you're going to see a decline in terms of revenue by somewhere probably close to 5 to 10% in terms of a decline. So keep an eye out. It is important. If the stock goes down, I mean, I hold it. I hold the stock because it's a consistent company that I think is doing fine. It's doing just fine. Then AT&T. People are going to be very interested on how this deal for DirecTV is the worst investment that anyone has ever made. The worst acquisition made by a company in the past 20 years, in my opinion. Is AT&T buying DirecTV for $50 billion and now trying to sell it for less than $20 billion. So awful return on investment, no shocker, but I want to see AT&T get out of cable and return to more of those telecom roots and really drive their business home that way through services. American Airlines and Southwest, I lump them in, believe it or not, because they're going to be sucky numbers. I mean, these are going to be sucky, really awful. 40% decline in terms of revenue probably for both of these bad boys. It could be closer to 30, but I don't expect good numbers at all. Then we have Tractor Supply Company. You've got Quest Diagnostics, Freeport, Freeport, McMurran, copper, and gold. What? I don't want to buy any of that copper and gold. That's just fake stuff. Fake news. Northrop Grumman, Polt Group, and Checkpoint. After close, still some big ones. Intel. And with Intel, again, we talk about cloud, baby. Intel with their chips. We want to talk about cloud and what this company has to offer in terms of the chip production and the new chips they've been producing. So I like Intel a lot. I really do. So we'll look at those earnings. We got Limelight, Samuel Adams, probably seeing a little bit of benefit. More people buying alcohol, eHealth, Capital One. Again, look at the previous two financials in terms of Discover and Synchrony for those earnings. See how that goes. Mattel, who used Dave & Buster's like same font and logo. That's weird. VeriSign, Emirates Bank Corp, SVB Financials, and Vicor. Then Friday, you've got Cliffs, American Express. Again, I refer you to the previous financial earnings for the month, for the week, and see how those go. For these companies, should be good, by the way. First Horizon Bank, ABB, Autoliv. You've got FG Bank Corp, Barnes Group, ITW, and Gentex. That is your weekly earnings to expect. I know this is a long one, but there's a lot of good ones, and next week's going to be even bigger. It's going to be huge. So I hope you enjoyed this, and you have a great day.